Okay, my name is Rodney Constable. I'm the president of Simple Market Signals and wanted to take this opportunity to do a little technical analysis with you on the S&P 500 and share with you some of the things that I am seeing. Now, first off, we had another good day in the markets here. This is Monday, the 10th of February. Markets have been closed for about a half an hour, and you can see here that the S&P 500 was up another almost 0.75%, 0.73% for the day, and we closed at another all-time high. So this market has been absolutely resilient. It's just been amazing to see what has happened. And you can see here that we're pretty extended, though. One of the things that I was just looking at was this is the 200-day moving average down here, the orange gold line, and you can see here the distance that we are from the 200-day moving average, okay? So yes, we're at an all-time high. Yes, this has been a very nice run that we've had, but keep in mind that whenever you have these extended runs, and this really began at the beginning of October, kind of the first week, the second week in October, and you can see here this massive run with just a couple of breaks of the 20-day moving average, which is this green line here. So we broke this 20-day moving average just a few times over the last 4+ months, and so absolutely stellar run. But we are I just ran the numbers, we're 10.85%, almost 11% above the 200-day moving average. And guys, whenever you're that far above the 200-day moving average, it's only a matter of time until you get a correction, and in most cases that will, at least based on my technical work, my decades of technical experience, it will generally bring you down at least to somewhere around the 200-day moving average. You can see here that we didn't get clear down to the 200 when we corrected in September into the beginning of October. We didn't make it back down to the 200 when we corrected at the end of July, beginning of, and really through most of August there. But we did in May when we corrected into the beginning of June. We did correct down and break the 200-day moving average here. And then again in March, back here in March of 19, you can see on the left side of the chart that we also broke down and just closed a couple of days below the 200-day moving average before taking off again. So it doesn't mean it's going to happen, right away, but just something to keep in mind. The other thing I am seeing here is we are starting to see a decline in volume on the right-hand side of the chart here. You can see that today's volume was actually one of the lower volume days, if not the lowest volume day that we've seen in the S&P 500 all year. As a matter of fact, maybe we'll change the time frames here, and we'll just look at this in a clicked on the wrong button there. Instead of 4 years, I want 4 months. So we'll go 0 there. We'll click on 4 months here. Update the chart, and just to give us a real good perspective, and then let's annotate this. I'm going to draw a horizontal line across this because volume does matter, okay? So it's one of the things we need to keep in mind. So let's throw a volume bar across there, and we can see that on the up days, this has been the lowest. It looks like the lowest volume day. Hopefully you can see this here on the right-hand side of the chart. This has been the lowest volume day that we've seen in the S&P 500 since the beginning of the year. Okay, so that is important on the up days. Now, we've had some down days where we've had slightly lower volume on one day, but volume does matter. So when you see a rising stock market on rising volume, that is a positive thing. When you see a rising stock market on weaker volume, that is a somewhat concerning sign. So just something to keep in mind there. Nothing to get too worried about just yet. However, because of the fact that we've had such a massive run in the S&P 500 without even breaking the 50-day moving average, which is the blue line here, okay, I'm using traditional technical analysis here, and we've only broken the 20-day moving average a couple of times in this multi-month run, and we're starting to see falling volume. If you had profits here, probably wouldn't be a bad idea to take some profits, rebalance your portfolio, and just keep an eye on the volume And the other thing here is if we break, just another short-term thing here I've been looking at, if we break below the 3,300 level, that would be your first indication. Okay, you can see this here again on the upper right-hand side of the chart. See the 3,300 level here? We broke down below this and got right back above it in short order. But we need, that's going to be your first line in the sand, so to speak, that we need to stay above that. Now, coincidentally, that's pretty much setting right where the 20-day moving average is. So kind of two indicators for you, the 20-day moving average as well as that 3,300 level. As long as we stay above that, there's really nothing to worry about. But if we break down, now that we've done this, we hit this top and fell back down towards the 50-day, didn't quite make it, and then we quickly, very quickly bounced up back above that. Now, if this 3,300 level fails, then that is going to start to provide more and more overhead resistance, and that to me is going to be a kind of a concerning sign. The other area of support here is going to be around this 3220 level. You can see this. We've kind of danced around this area here at the end of 2019, and then we corrected right really down to that here about a week ago when we had this correction, fears of the coronavirus and other things going on in the markets. We corrected right down to that 3220 level and bounced off of that, never closed below it. So again, you can kind of see that this has built some area of support on the S&P 500. So there's, the 3,300 level and then the 3,220. Now below that, the area I would really watch is around this 3,100 level. And you can see here that we had overhead resistance at this point. Once we broke through it, then that 3,100 level has acted as an area of support. So there's your three shorter term levels of support. However, it would not surprise me to see us get down at some point in the not too distant future down to somewhere around that 200-day moving average, maybe slightly below it. You can see the 200-day moving average is lining up quite nicely with this 3020 level, which there's a lot of support there going clear back into the summer of 2019. And you can see that the 3,000 level, somewhere in this area, I think is really where the support is at. And the fact that we're almost 11% above that 200-day moving average tells me that at some point, at least it's something to watch, right? I have no crystal ball, but at some point in the not too distant future, it would not surprise me to see us pull back to this area. Now, hopefully you guys have enjoyed this. I'm going to click back out of here, and I'm not going to save the changes. I hope you've enjoyed today's technical analysis of the S&P 500 here on Monday, February 10th. And hopefully I've given you a couple of really good things to work with over the next few weeks, a couple of levels to watch. However, if you would like to take your trading and investing to the next level, if you would really like an advantage over even traditional technical analysis, and don't get me wrong, guys, I think you can see here that I'm good at it. I love it. I understand it. However, after decades of being in financial services, after decades of being a trader, trading and investing in mutual funds and ETFs, trading stocks and options, there was still something missing for me. And back in 2017, after decades of research and development, I finally found the missing pieces to the puzzle, and I was able to create a model for my own personal trading that has helped me enormously. And after I started working with it back in 2017, then I realized really how special this was. And so I've created a business around this about distributing this information out to individuals. It's very, very cost effective, guys. And what you're going to want to do is you want to go out to my website, simplemarketsignals.com, and sign up for my weekly newsletter. This is built around, and I call it Simple Market Signals. They're weekly signals, and it's an aggregation of numerous areas of the stock and bond market, including technical indicators that are way beyond traditional technical analysis. So this takes technical analysis to the next level. This gives you insights and advantages that traditional technical analysis just cannot give you, okay? And guys, it's a whopping $19.95 a month. The first 2 weeks are free. There's no contracts. You can cancel at any time. I'm that confident in what I have here, okay? And the people, my subscribers, are loving this. They don't cancel. They stay with it. They love it. I have financial advisors that use this to help run their practice. I have individual investors that use this to help run their investing and their trading. Okay, so whether you're a mutual fund investor just in your 401k, whether you're a financial advisor, whether you trade stocks and options or invest and trade in ETFs, this will help you. Okay, again, it's a weekly newsletter. I email it out on Saturday mornings. It's generally in the morning, but sometimes depending on how much research I'm doing, it'll be maybe in Saturday afternoon. But I try to get it out every Saturday so you guys can have the weekend to read this. But when you go out to the website here, it's HTTPS /2// of course, simplemarketsignals.com. You click here to get started. Of course, you're going to have to accept the cookies first. Click here to get started. It's super easy. It'll take you 4 to 5 minutes to get signed up. It's $19.95 a month. You get your first 2 weeks free, and then it'll automatically bill on your credit card every month after that. So, folks, I hope you'll join me. If you want even more information about what this is, go out to my website, check out my other YouTube videos, including my hour-long webinar where I go into much greater detail as to the advantages and some of the challenges that we're seeing as traders and investors. Can't get my words out today. I have several videos out on my YouTube channel that you're going to want to check out if you want even more information. But you're not gonna regret the decision. This is going to give you a tremendous advantage over other traders and investors. And again, folks, this is a proprietary system. I am the only person on the planet that has this exact model, and it works. Okay. And again, if you don't like it, you can cancel at any time. It's $19.95 a month. There's not a whole lot of risk here. Okay. So I hope you join me. And in the meantime, I hope you've enjoyed this technical analysis of the S&P 500. Please subscribe to my channel, give me a thumbs up, leave me a comment, and I'll see you again soon. Thanks for joining me.